Well, the blue and the blackberry question. With blackberry, let's take that first. Thereafter, if we have time, we go to, don't forget, we don't consolidate associates. We only show investment in associates in the statement of financial position. In the P or L, what do we do? In the P or L, we only show share of associate profit after tax. Have I not sent the question on associate here? I've sent it now. Okay, you must have it in your hand. Okay, it's Mr. Wasida used to send it. So let's go to blue, black. Let's go to question. We have done cats. We have done Hydra. Blackberry, blueberry, whiteberry. The requirement says I should consolidate, prepare a consolidated statement of profit or loss, and consolidated statement of financial position. Good. What is now my own duty? Okay, no problem. Statement of profit or loss. Who is the parent? Blackberry. Blackberry. So consolidated. Statements of profits or loss and other comprehensive income. Year ended. Which year ended? For the year ended 30th June 2016. Now, what is my own duty? Don't forget, we don't consolidate associates. I will have read for the question because we are investment in an exam. I don't know. I will determine the type of investment, but because we know we are dealing with investment in associates. I will say revenue. After revenue, cost of sales. After cost of sales, we have the gross profits. After the gross profit, next, we have distribution costs. We have admin expenses. Before the finance cost, I will not say share of associate profits. Before the finance cost, we don't consolidate associates. Then I will say finance cost. Profit before tax, then tax. Profit for the year. In the exam, I will open this. After this is done, we'll go to statement of financial position. We'll say consolidated. Statements of financial. as at 30th June 2016. No current assets. No current assets. PPE. The question has been said by Mr. Wasil. And if everybody has it, send it. I know the question has been sent. And if anybody still has it, you can send. And the one that checked King and Kings this night, this question has been sent for a long period of time. $15,300 plus that of the subsidiary, 1,800. Investments. Services. Next one, investment in associates. We don't consolidate associates, then goodwill. After the goodwill, I leave 2 line space. Go to the current assets. Current assets, 12.5 plus 2.4. Total assets. After that, equities and liabilities. Equities and liabilities. Share capital. Land revaluation reserve. Other equity. Other equity reserve. Retain earning. NCI. After that, more current liability, 6% loan notes. $3,000. Current liability. 1,000 plus 6.8. That is all. With this, for me to balance it, what do I need? I will open all the necessary accounts sharply in exam. The group structure, adjusted retained earnings of subsidiary, as per SFP, determination of net assets. Of net assets of subsidiary. Then I need to calculate the goodwill. I need to calculate the goodwill. Say items, DOA, DOC, post. After then, I open my goodwill account in exam to any mark. So goodwill. I know the formula. Cost of investments, add NCI, purchase consideration. After the purchase consideration, net assets at the date of acquisition, goodwill. I don't know, there'll be impairments. Then retain any of the parents. I need to open. Retain any of parents. As per SOP. Then I need NCI. NCI, date of acquisition. Investment in associates. I also need my cost of sales because I have pure air. Is there anywhere to open cost of sales account? Yes. Will I open cost of sales here? That's all. Immediately I've done this, I will now start reading and be posting. Fast, because I don't have time in the exam. They will first of all give me mark for doing this. Don't forget, we don't consolidate associates because we don't have control. So I'll go to the question. As I read their post, I become post Nadu. Below are the separate financial statement of BlackBerry and the two investee companies, which has also operate in the same industry. Story. First one, on 1st of March 2016, BlackBerry acquired 80%. They acquired 80%. Let me open my working book. Let's take another color for the working book. We'll say working. Date of acquisition. According to the question, we acquire 80% on 1st March. 1st March 2016. And I'm to consolidate 30th June 2016. Oh, March to June, March, April, May, June, 4 months. During the year acquisition, they will not supply me retain any. It is during the year acquisition. No retain any at the date of acquisition. That is certain. How many percent does he acquire 80% of equity share capital of BlackBerry? I'll go and post. He acquired 80% sharply. Next week, we are going to fellow subsidiary and subsub. Parents propose 80%, NCI 20%. To end amount. Okay. How does he pay for the 80%? Share capital of BlackBerry. The consideration consists of two elements, two means. A share exchange of 3 shares in BlackBerry for every 5 shares in Blueberry. Oh, BlackBerry 3/5. Said 3 shares. Don't forget, anytime there's a share consideration, I will remember the rules of share consideration. It must be issued at the market price per shares of the parents. And it can only be tested in 2 ways. It's either they give me the issue direct or exchange ratio, which they give in this question. And the accounting entry to raise if it is not recorded. Good. It's okay for the share consideration. But before then, I will ask the question, what is the total numbers of shares in subsidiary? Because values of shares all over nominal value. Because you only acquire 80%, it does not acquire 100%, which is 5,000 divided by the nominal value. In case the nominal value is not given, I will assume it is 1 naira. But this question gives us the nominal value of 1 naira. So naira cancel naira. So give me 5,000. You only acquire how many percentage? 80% of this. And that's okay. Parents acquire shares. Which is 0.8 times 5,000. So give me 4,000. For the share consideration, parent over subsidiary, 3/5 times 4,000. 3 divided by 5, please. That my sister. As you join the platform, please help me with figure. 3/5 times 4,000. Five goes to 48.
2,400.
2,400. It must be issued at the market price per shares of the parents. I'll go to the question, what is the market price of the parents? And the issue of 100 naira, 6% loan note for every 500 shares acquired in Blueberries. The share issue has not yet been recorded, but the issue of the loan note has been recorded. At the date of acquisition, shares in BlackBerry Limited had a market price of 5, and the shares in Blueberry had a sub-market price of, he has given the market price of the parent 5. He also gave me the subsidiary of 3.5. Why do you give me the subsidiary? It's an indicator that NCI is valued at fair value. I'll go and look at the group policy. What is the group policy? We go to additional information 7. BlackBerry policy to value controlling shares at fair value as a date of action. For this purpose, Blueberry shares. So he has told me it is fair value. I know already. How? Because when it is fair value, one of the indicators of fair value, I've seen it, which is the market price per shares. I will put full stop to what I'm doing to end the math. He acquired 4,000 out of 5,000. NCI is 1,000. I'll go and post times 3.5 kobo. I'll just go to the proof. Let me end that one mark first. Okay. Goodwill, NCI, the date of acquisition, 1,000 shares times 3.5 to give me 35. NCI, the date of acquisition, 1,000. I've done that math. I've debited cost of investment with 35 and I've credited NCI. I will now go back to what I'm doing. After I've ended that math, not to forget. Cost of investment must be debited. Two four times low 5 naira. Unit is 5 naira. Cost of investment debit 2,004 times 5 naira. Unit is 5 naira. Sub is 3.5. Equity shares must be credited. 24 times 1 naira to give me 24. To give me 24. Share premium. A secret premium, yes, to be credited. 5 naira minus 1 naira times 24. 24 times 5 naira. 24 times 5 naira. You have to solve the question.
12,000.
Huh?
12,000.
12,000. 12,000 minus 24, that will give us 96.
96.
Don't forget, cost of investment must be debited, equity share must be credited, and share must be credited. Instead, it has not been recorded. When it is not recorded, I will record. It is not recorded. I will record. Cost of investment, 12,000. Equity shares, credits. According to the question, what is the share capital of the parent? I'll go and check. Share capital of the parent. $15,000 plus 24. No share premium account, but I've seen other equity reserve. Other equity reserve. What is other equity reserve? And the question equity reserve is 500. 500 plus 96. That's all. Ask me question. 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 In the absence of no question, we also use another cost of investment, loan notes. We also use another cost of investment. I say for the loan notes, which has been recorded. The question says the loan note has been recorded. Set. And the issue of 100 naira 6% loan note for every 500 shares acquired. For every 500 shares acquired, How many shares does he acquire? 4,000. For every 500, he will issue 100 naira. That's all. This will give me 800. Because 0 cancel 0 here. It has been recorded. Cost of investment debit, 800. Investments, credits, minus 800. That's all. And let's assume it has not been recorded. What are you going to do if it has not been recorded? This question says it has been recorded. Good. Let's assume it has not been recorded. If not recorded, 800, cost of investment, debit, 800. I have a loan that's not recorded, credit, 800. The finance cost is a corporate loan. What is the percentage of the interest for the finance cost? Percentage of the interest, 6%. 6%. And that's okay. Finance cost. 6% of the value of the loan, 0.06 times 800. This will give me 48. For say pure head, I'll debit my pure head with it. Debit. Then liability, or if he's paying the money, I'll credit 48. This is what I'll do. Don't forget to return, you will also be debited for that 48 of the parents. I'll send a question and a solution that the loan note has not recorded so that you can see. You must pass it. Not only pass, you must pass and pass well. You must pass and pass well. In network, we don't produce 50-50 chartered accountant. We produce 80-90. Because I must call you to ask about your results. Because you must give me one. Other person to celebrate your success. Ask me a question. You can ask me a question online, offline, as you like.
Excuse me, sir.
Yes, I'm with you, ma. 100%.
So after this PLL debits, what do you have next under it? Is it current liability or cost of
No liability will
investment?
be credited. Our credit has not paid the cash.
The
If it's paid
48
cash, I'll credit cash. When you have not paid, I'll make provision for it. I'll credit penny to when you will pay. When it is time to pay, I will not debit the liability and credit cash.
So I mean
When
the finance cost.
the finance cost.
Yes, sir.
The finance cost. Next. But he said it has been recorded. I will not need to post this. When it is recorded, this does not concern me because it has been recorded. When it is recorded, what do I do? Cost of investment, debit, investment credit. I'll go to the question. Say it is recorded. I'll just go. I've opened it down. No story. My investment. Minus 800. Then I'll go to for my goodwill calculation. Use to cost of investment, 800. So give me 12,800. 12,800 plus NCR, 12,800 plus NCR. This is 13. 5, 6. 16,300. 16,300. So far, so good. This is what the question has said. I'll move on. On the BlackBerry Limited had earlier acquired 2.4 million shares in Whiteberry Limited. The stock market price of $1 per share on 1st of January 2016. 2.4. I need to determine the group structure. We know it's an associate because that is the topic we have in the exam. I must know what type of investment do I have. Okay. I will go to the question. I'll say, what is the total numbers of shares in associates? We are seeing additional information. 1 said he acquired 2.4 million. What is the total numbers of shares? Values of shares all over nominal value. What is the values of shares? 6,000. In Whiteberry, all over nominal value of 1. So give me 6,000. He acquired many shares? 2.4 divided by 6,000. To know the group structure. What is the group structure? What is the group structure in associate? 2,400 divided by 6,000 times 100. What does it give us?
It's 40%, sir. 40%.
40%. Don't forget, 40% is which investment? Associate. When they give me the book, the question on the date of the exam, I will look at the question, use calculation to know what type of investment do I have. Immediately, I have known the type of investment, I will now open everything. We have 6 more solid topics from next week. Fellow subsidiary. I will solve question on it next week. Piecemeal acquisition, disposal of subsidiary, cash flow. So from this week, we have started CR group. Start rolling it over. Please. I will now go to the question. It's okay. Associates. Group structure. We'll go and pose. Associate 40%. Don't forget, how much does he pay? How much does he pay? Say paying $1.50. Cost of investment, 2,400 times 1.5. How much does he give us? 2,400 times 1.5. How much does he give us? Don't forget, he acquired the associate 1st of January, date of acquisition, 1st of January 2016. And we are consolidating 30th June 2016. Associate was acquired 6 months. That is why I said earlier, he had acquired earlier. I said BlackBerry Limited earlier acquired. Earlier, he has acquired associate before he acquired subsidiaries. Good. 2,400 times 1.5. What does he give us? 2,400 times 1.5.
3,006.
3,600. I will ask the question, has it been recorded? It is silent. How do we know it is silent? After saying he's paying $1.50, he does not say anything again. He moves on. He does not say anything again. It means it is silent. He said, how can we know it is recorded when the question is silent? That is, this amount, he does not say otherwise, that is not included in his investment. That means it's recorded. True. The question will clearly tell you like the subsidiary. It says share consideration has not been recorded, we clearly state it. And third, through investigation, which you have done last week, through investigation. It has been recorded. Anytime it has been recorded, what is my own duty? Or credit investment. Say investment. Credit minus 36. I'll now go to cost of investment in associates. Cost of investment in associates. Cost of investment in associates. I will debit. That's all. That is all. This is what I will do. That is all. I'll go there now. Go and remove. Investment in associates minus 36. I'll go to the that is it. That is it. I'll move to the next question. Move to the next, I'll do to the next adjustment. I'm done with that. At the date of acquisition, the fair value of Blueberry Limited assets were equal to the carrying value, with the exception of property. This had a fair value of 1.2 below the carrying amount. Below the carrying amount. It's not a surplus. Below what is my own duty. PPE will be credited below the carrying amount. Then I'll debit adjusted return. So say PPE below minus 1. Credit the PPE. I'll go to adjusted return. I'll go to the reserve. It's okay. Share capital. 5,000. Does he have land revaluation reserve? I will be careful in case he has. Did they give me anyone different from the one at acquisition, different from the one at consolidation? No. It does not have other equity reserve. I know that they will not give me return because it is doing the say revaluation deficit on property. 1.2. 1.2. There will be depreciation. It's either you give me useful life or you give me depreciation direct. What is the question 6? This will lead to a reduction in depreciation charge to cost of sales of 50,000. You don't need to tell me that. If it is surplus, it's additional depreciation because it has increased in value, they will depreciate the cost of sales. But if it is deficit, it will reduce the cost of sales because I've overcharged myself initially. I've been charging uses of what? 1.2. But in the PPE, I will debit the PPE with over excess depreciation that I've charged initially. 50. Go to the PPE. PPE was 50. I'll now come here, adjusted return. So depreciation. I will credit depreciation, credit plus 50, credit. Or credit. The next one, I'll go to my cost of sales, not to forget my cost of sales plus depreciation. I'll go to the cost of sales. I'll say parent cost of sales. Parent cost of sales in the question. Let's go there. What is the parent cost of sales in my revenue? 7,500. Sub cost of sales, which is 36,000. Times 4/12. I will acquire for 4 months. Then depreciation. It's a reduction. If it is surplus, it's addition. 36,000 times 4/12. I think that will give me 12,000. Bro, how much does it give us? The first calculator, can we share another one?
Hello, sir.
Yes.
Sir, where do you get that 36,000?
What is the cost of sales of the times 4 divided by? Go to the questions, 12,000. 12,000. Go to the question. What is the cost of sales of the parent? 7,500. Subsidiary is 36. But I only acquire for 4 months. I will prorate. Next. Next. In the absence of no question again, I'll proceed. In the absence of no question, let me proceed.
So I have a question, please.
Ask your question. Ask your question. You are free.
Sir, why is depreciation treated in cost of sales instead of under administrative expenses or costs?
That is in your published account in EFA, there are some depreciation that go to admin. There are some depreciation that go to cost of sales. Like plant and equipment is cost of sales. Maybe this property is titled to the what they are selling. The question has told you, take it to cost of sales. There are some the one that go to distribution costs, marketing, like cars, marketing cars. The division of marketing car will go to distribution. But this question has laid emphasis that we should take it to cost of sales. And for simplicity of approach in exam, take it to cost of sales. We are not doing publish here.
All right, sir. Thank you, sir.
Any other question? Any other question? Ask your question to any length. No question is foolish. Unless the question says otherwise, some question will say, take it to admin, I will do. But if it does not say anything, I don't have time to waste. Next, in the absence of no question, I proceed to read the question further. I will do as if I did not see the P or A. I will just concentrate on the statement of financial position. Yeah. They say has not incorporated, which we have done. Additional information 3. BlackBerry Group policy to revalue property to the current value at each year end. On 30 June 2016, value of the Blueberry property was changed for the value at action. There is a land element of BlackBerry, which is BlackBerry parents. Parents. Property has increased by 500, as shown in other comprehensive income. That means they posted. As shown in other BlackBerry, which BlackBerry parent has done a revaluation surplus on his land, and you see that there's an increase of 500. I will debit the PP and credit land revaluation reserve. It will not go to the net asset. Why? Because it's the parent that is revalued. I will only debit the PPE by 500 and credit reserve. But the question says, as shown in other comprehensive income, for you to show it in the POL to credit OCR, he must have debited the PPE and credit the land revaluation reserve or other equity reserve. So I will just walk up past, go to the next one. Next, on June 2016, BlackBerry sold goods to Whiteberry Limited for 2,000. No, we have missed information. Additional information for sales from Blueberry to BlackBerry throughout the year, started June 2016 was 12 million. Throughout the year, we did not acquire throughout the year. We only acquire 4 months. We need to prorate to get the 4 months because it's the post-acquisition problem. Says that is my problem. BlackBerry had 2 million at the cost of BlackBerry Limited of the inventory being supplied by post-acquisition period by Blueberry as at started June 2016. Look at what he's saying. Said, okay, he sold total sales for the year. Total sales. Said the total sales is 12 million. Utaglu says, don't forget, you cannot sell to each other because we're a single entity. But the total sales throughout the year is 12 million. The sales from post-acquisition sales, I need post-acquisition sales. I need post-acquisition sales. That will have been 12 million times 4/12 because you only acquire for 4 months, which is going to give me 4 million. Then what do I do? You cannot sell to each other because we're a single entity. I will eliminate intergroup transaction by saying revenue to be debited minus 4,000. Then my cost of sales to be credited minus 4,000. That is the first thing. Why do I need to do this? Because there is what? POL. I'll go to my POL revenue. I'll go to the POL. I'll go, okay, in my POL. What is the revenue of the parent? Go and check. So, in the question, what is the revenue of the parent? 92,500. Plus that of the subsidiary. What is subsidiary? 48,000 times 4/12 minus intergroup sales of 4,000. I'll go to the cost of sales to eliminate intergroup sales. So intergroup that is it. That is it. Then the unsold elements. The unsold elements, I need to what? Unrealized profit on inventory. Said the unsold now. There is unsold of 2 million. It's okay, unsold 2 million. And he has marked it up. I think it's marked up. Markup on cost, markup of 25%, markup 25%. So unrealized profit on inventory. We now equals 25 over 125 times 2,000. 25 over 125 times 2,000. What does he give us? Oh, yeah. We still have another question after this. No time to play.
400, sir.
400. Who is the seller?
The
Seller account
subsidiary.
to be debited. Then consolidated. Inventory. Credited. Okay? For the 400. Subsidiary is the seller. Or go to the subsidiary account. Why do seller make profit? Go to his subsidiary account and remove unrealized profits on inventory. Go to the consolidated inventory to credit. No inventory, but there's current asset. Then I'll go to the cost of sales. Then used to forget this. Unrealized profit must be added in order to reduce the revenue. See, unrealized profit on inventory. We add it to the cost of sales. We add it to the cost of sales. What is it? Then the next one. On June 16, Blackberry Limited sold goods to Whiteberry. Is it Blackberry now? They are sold to associates. Those are achieving a markup of 25%. The entire consignment is still remain unsold. Total sales. Don't forget, we're in additional information file. That's okay, no problem. Total sales. How much is the total sales? 2 million. There's a markup of how many percent? 25%. %25 markup. Let me check. Yes, 25%. And they sold. He said all the goods still remain in the inventory. 25 over 125 times 2,000. So give me 400. Okay, but I will take the 40%. Because you only accounted for 40%. And I say, okay, 400 times 0.4. This one will give us 160. Please help me with the calculator. 400 times 0.4.
160, sir.
160. Who is the seller? Parent is the seller. What type of transaction is this? It's a downward transaction. That was downstream. Downstream. Why? Parents, seller. But if associate is the seller, it's going up. If associate is the seller, we call it upstream transaction. When associate is the seller. But if parent is the seller, I will debit return. Parent. debit minus 160. Investment in assets, credit minus 160. But if associates is the seller, I will debit retain earning minus 160. Then because the good is still with the parents, associate is selling to parents. Parents see as the good. IAS 28 said, go and credit inventory, consolidated inventory, because the goods is still with the parents' book. Don't forget, you cannot sell to each other. You cannot make profit, but we don't consolidate associates. We only share profit or loss. Take of unrealized profit, impairment, dividend pay. I have sent a voice note regarding this. And the debit and credit, I've also sent a voice note. Please, you can listen to it very well. And listen to it very well. So I will now post this. Go to the parent account, debit and credit investment in associates. Okay. Parents, unrealized profit on inventory. Associate, I will indicate 160. As per SWP, what was the earning? 12,900. Now, then associates, unrealized profits, inventory. Credit, 160. That's the end. We'll go to the next one. BlackBerry investments include some available for sales investments that are increased in value by 300,000 during the year. Oh, he has fair value. And you see that this investment has increased by 300,000. We'll go to the question. Investments or debit investment is there's a fair value gain. 300 plus 300. I'll now go to what? Return of the parents to credits. Go to return of the parents. Fair value gain of 300. So credit is account and debit investment. Next. The other equity reserves related to this investment is based on their fair value as at 30 June 2015. There were no acquisition or disposal of this investment during the end of 30 June 2016. Policy is to value not controlling interest, which you have done. Lastly, it was determined that in the end, 10% of the goods related to acquisition of Blueberry was impaired. 10% was impaired. There was no impairment in associates. Good. What is now my own duty? I have not known the goodwill. I'll pass it down. 10% as impaired. I need to know the value of the goodwill. I'm done. That's the end of the question. Just to couple it, or just say impairments. 10% times, I've not known the value of the goodwill, but 10% as impaired. That is it. With this now, I can now consolidate. I can now consolidate We're closing the book. Oh, net assets. They will not give me retaining. It is during the year acquisition. I will apply the formula. It's okay. Determination of net assets. Determination of retain and adhering. Subsidiary. So retain and the date of acquisition plus year ended. Profits and loss equals to retain. What is the return at SOFP? 95. Profit for the year. 68. Times 12/12. A plus 68 times 12/12. A plus 6,800 times 12/12. These 1,800 times 12/12. What is the figure?
2667. No, 2267.
2267. Find the figure. K now equals to 95 minus
7233.
7,
233.
7233. That is it. Go and slot in. So what is the net assets at the date of acquisition? 5,000 plus 7233 minus 12. What is the figure? My sister, please.
Hello, sir. That share capital is how much, sir?
5,000.
Okay. That's 11,033.
11
033.
as the net asset. 11 what is the goodwill now? 16,3 minus 11,033.
5267.
5267. Impairments. 5267. 10% will give us 5267. So approximate. 5267 minus 527.
4740.
Goodwill to be reported.
No, 40. 4740.
4740.
Yes.
Please confirm it too. 4747. Goodwill to be reported. Seven forty. Next. Next. Just okay. Let me share profits. Nine five. Don't forget the payments. 95 plus 50 minus 400.
9150.
9150. 9150. 9150 minus 1917.
1917.
We share. No. 91. 1917. 1917. It will be shared between the parent and NCM. Separate profits. 0.2 times 1917.
That's 383.
383.4. The parent to share the remaining. Share profits. Oh, nine. 1553.6. 1553.6. Impairments. 10%. 80% of the total of 10%. 527. 527. 0.8. What's about to say? What's one? Let's see that. Zero point two times 527. One zero five. Associates, share profits. What is the profit of this?
Bolu,
What are you saying? Are you saying something?
She wasn't talking to you, sir.
Oh, okay. Associate profits. C6 as well. C6 times how many percentage? In 360. That's the end. The silent one there. Three six minus 160 plus 1360. 48. Is it? 48. Investment in assets. Right. 12 man minus 16 plus 300 plus 4, 3 plus 6 minus 4 2 1 plus 6 plus 4 360. Nice that. Three five plus 3 8 3 and 4 minus 1, 7, 7, 7, 8. 8, 7, 7, 8. PCI. Three, 7, 7, 8. PTI 4, 5, 5.2. 10,100. The valuation reserve. No need is 3,000. 16,800. 17. Please, what is the land revaluation reserve? Please let me check. What is the land revaluation reserve?
2,000.
2,000. Good. I'm done with that. We pay 1,800 plus 1,800 minus 1, 2 plus 50. 360. 1,000. Investments 12,600 minus 8 minus 36 plus 85. The current assets. Current assets 5 plus 4 minus 400. 14,500. Total assets. This is plus 85 plus 48 plus 47 plus 0 plus 1, 69,590. 68,590. Somebody check it out now. Also, 100 plus 2,000 plus 10 plus 45 5.2 plus 2 08 1,000 plus 16 68 590. Immediately this one balances. I'll go to the your head. So, but I'll go and get my cost of sales. I say 7,500 plus 12,000 minus 50 minus 4,000 plus 400. 78, 850. I will take it to the revenue figure. My revenue 78 plus 6, 78, 850. Then 38,000 times 4 16,000 minus 4,000 plus 92,500. 104,500. To get my gross profits. Minus 28,850. 25, 6 weeks. Distribution cost. Go to the question, what is the distribution cost of the parents? Distribution cost.
Two five.
25 plus the subsidiary.
1 2.
1 2
Yes.
1 2 times
4/12.
4. So 1 2 100.
Plus
100
2
plus
9.
2
2
9.
9.
Admin expenses. What is the parent admin expenses? Give me the figure.
5 5.
Huh?
5,500.
5,500. Was the saw
2 4. 2,004.
1,004.
6,003.
6,000 what?
6,300.
Oh, plus impairment. Impairment will be an admin issue. This is our impairment figure. Up to 7. Plus
6,827.
6 8. 6 7. Share of associate profits. I can do small working. Share of associate profits. Profit of associates. 6 8 times 6/12. By 0.4. 6 times 0.4. 1,360. Yes. Unrealized profit on inventory. Go to the question. Go ahead. Finance cost. What is the finance cost of the parents? Finance cost of-
100.
Huh?
100.
100 plus that of the sword.
Nothing for the sub.
And then my
So
profit,
what about the finance cost on the loan?
it has been
What?
recorded. It has
Okay,
been. Does not
okay.
concern you. Said it has been recorded. Does not
Okay.
concern. Next. Profit before tax. Let me get it.
$13,900.
1,300.
Yes. No. Sorry, sir.
25. 650. Minus 2 now. Minus 68. 7. Plus 1. 2. Minus 100. 17. Seventeen. 22. What is the task of the parents? What is the task of the parents? What is the task of the parents?
3,900.
No. Plus the sub.
$1,600.
1,600 times 4/12.
4433.
Hmm?
4433.
1 4
4433.
44
33.
44. 44 what?
4433.
Okay. 44. Okay. Apply the figure. 44. What are 3, Abi?
Yes, sir.
So that will give me profit for the year. When I say 70,023 minus 1,433, that will give me profit for the year.
12,590.
12,590.
Nine.
That is the end of the question. Profit attributed to NCR. If you see the solution, you can go and be looking at it. That's an issue. Now, let's take another question.
Sir, please, can you send this solution to the group? Help us to save it.
Solution to the group.
Yes,
Okay,
sir.
ma'am.
Thank you, sir.
No issue. Let's go to King Bears. Let's go to. They will not give me the financial statement of associate. You will not know. As it can be tested in 6 ways. I will not see the financial statement of associate. But what is my own duty? Very simple. After reading the question throughout, that's why in exam you must make sure you read the question to get associate. Oh. Where I send this thing to, let me see. If I send it to the platform,
So send to the group.
there now. So in case that is happening, what is my own duty in exam? When they did not give me profit of associates, I will still open, but I know they will not give me. I have sent. Let me please see.
Thank you, sir.
Okay. Let's go to question. King. Let's go there. They will not give me associates. Let's do another one. Share now. Okay. So what is my own duty in exam? After I've read the question, we also give you POL and statement of financial position. No financial statement of associates. But if you go to additional information 5, on 1st of January 2020, King acquired King acquired 30% interest in Knight for 40 million. Oh, it means he has an associate, but no financial statement. Be careful. Your question will not give you financial statement. In short, going further, you hardly see the financial statement of associates. Just like last direct question 2 on sub. No financial statement of associates, and we have associates. So what is my own duty? I will open everything. Open everything and open it wide. How wide we are going to open it, it depends on you. Hardly
Sir,
they
which
give me the
question
question.
are you doing, sir? Question what, sir?
King,
Question what, sir?
King is there. The new latest sent question this night.
Okay, you
King,
sent another one this night.
yes. King Prince. King. Consolidated statements of profits or loss. Year ended. Which year ended? 31st March 2020. Which in thousands revenue. Or substance. Gross profits. Admin expenses. With distribution. So we have distribution. The investment income. Finance costs. Profit before tax. Profit before tax. Then tax. Profit for the year. Today this one is done. We'll go to the statement of financial position. Consolidated. Consolidated. Statement of financial position. As at 31st March 2020. No current assets. No current assets. PPE of the parents. 150,000 plus 400,000. Investments. 250,000. Investment in associates. Goodwill. After the goodwill, I leave line space. After the goodwill. Current assets. 120,000 plus. Total assets. Equities and liabilities. Share capital. Share capital. Share premium. Retained. Any. NCR. No current liability. %. New notes. 45,000 plus 32. Current liability. 250 plus 120. This is what I open in exam. After I've done this, to balance this account, what do I need? You know what I will need? New structure. Adjusted. Retained earnings of subsidiary. As per SWIFT. Determination. Financial of net assets of subsidiary. Items. DOA. DOC. Yes. Goodwill. For the goodwill calculation, cost of investment, add NCR, purchase consideration, net assets, date of acquisition, goodwill. I need retain. Here not the payments. I need SCI. Date of acquisition. I need investment in associates. Then I need to open cost of sales because I have POL. Cost of sales. That's all. We did our vote. Go to the question. Go to the question. Workers. Team Public Limited Company acquired 24 million shares in Prince on 1st October 2019. 1st October, date of acquisition, 1st October 2019. When am I consolidating? 31st March. DOC. 31st March 2020. From 2019, this is 6 months. October to December, 3 months. January to March, 6 month account. No retain any at the date of acquisition, which is during the year. Acquisition. They acquired 24 million out of how many? Total number of shares in subsidiary because the values of shares all over nominal value. What is the values of shares? 30,000. But in case they don't give us the nominal value, we say it is 140,000. We only acquire how many shares? 24 million. 24 over 30 times 100. How many percent does he acquire? 24. Well, divided by 30. 80%. I'll fill in the gap. Go to the question. Parents. 80%. Parents. 80%. NCR. Good. After that is done. For a constitution make up of a share exchange of 2 shares in King for every 3 shares in Prince, share constitution. Parent over subsidiary. Parents. Parents over subsidiary. 2 over 3 times 24,000. 2 over 3 times 24,000. 2 over 3 times 24. 16. Over 3 goes to 24 is 8. 60,000. It must be issued at the market price per share of the parents. Oh, the market price for each shares in King and Prince, 3 naira, 2 naira. They've given me Prince 2. Is an indicator that NCI is valued at fair value. I'll go to the question. King has a policy of valuing up controlling interest at fair value. So additional information 7 has confirmed to me that it's fair value. Yes. When he has confirmed to me it is fair value, what is now my own duty in exam? I'll quickly go and do that. I'll paint this one. Go ahead, that man. NCR. He has given me the market price per share of subsidiary 2 naira. NCR date of acquisition. 6,000 shares. 30,000. Parent acquired 24. The remaining belongs to NCR. Times 2. 12,000. Date of acquisition. I've gotten that cost of investment. For my goodwill calculation, NCR, 6,000 shares at 2 naira. 12,000. I'll go back to what I'm doing after I've earned that mark. Oh, they've given market price per shares. Cost of investment debit. 16,000 times 3 naira. 16 times 3, 3 times 6, 18, 48. Equity shares to be credited. Equity shares. To give me 16. Has it created a premium? Yes. 48 minus 16. Share premium 32. Cost of investment debit. Credit. It is 2 credit against 1 debit, provided it has not been recorded. Let us find out. Okay. Simple. And a cash payment of 2 naira for every shares acquired in Prince to be paid on the date of acquisition. Only the cash consideration was recorded in this book. Only the cash. Shares has not been recorded. Cost of investment. Cash has been recorded. Cost of investment 48. Equity shares. Credits. What is the share capital of the parent? We'll go and check. It's 50,000 plus 16,000. For the premium, what is the share premium of the parent? 20,000 plus the 32,000. That's all. That is all. We'll go again. Cash. For every two shares, for every acquired shares, how many shares does he acquire? The cash payments. He acquired 24 million shares with 24,000 cash payments. Recorded. Cost of investment, debits. 24,000 times 2. 48,000. Investment has been recorded. Credit minus. It has been recorded. We go to the question. Investment. What is good? A minute. Sorry. Okay. We are good to go. Good. So recorded investments or credit minus 48. Go to the cost of investments and do the calculation. 48. So 48 plus 48, that will give me 96,000. 96 plus 12,000 will give me 96,000 plus the 12,000. 108. 108,000. Less. And the date of acquisition, is information 2. The carrying value of the net asset of principal approximately equal to the fair value. In the section of land, which fair value is assessed to be 20 below the carrying value. Is below the carrying value. So it is not surplus. Or go and pick the shares. What is the shares in subsidiary? The share in subsidiary, 30,000. He has the share premium. 15,000. He's doing the year, nobody will give him retain earning. Then revaluation deficit on land. 20,000. I'll go to the PPE. Go and credit. 20,000. Good. That is that. No depreciation is planned. During the post-acquisition period, Smith sold goods to King at a great price of 2 million per month. 2 million per month. We acquired for 6 months. Intergroup sales. First of all, eliminate intergroup sales. Don't forget, we acquired for 6 months. October to March. Say intergroup sales. Says 2 million per month and 6 months times 2 million. You also give me 12 million. What do I do? I say revenue. Debit minus 12,000. Cost of sales. Credit minus 12,000. For the intergroup sales. I'll quickly go and post that to end the map. Revenue of the parents. What is the revenue of the parents? 80,000 plus subsidiary 75,000 times 6/12 minus intergroup sales of 12,000. Then my cost of sales that I've opened. Cost of sales of the parents, which is 30,000. So, sub is 25,000 times 6/12. Then intergroup sales will be eliminated. Good. That is that. Is there any unsold? Let's ask. 1/3 of the received goods from placement held at the inventory at the year end. 1/3. So 1/3 of 12,000. Now deal with unrealized profit on inventory. profits on inventory. Total sales 12,000. Unsold. Unsold. 1/3 times 12,000. 4,000 still remain unsold. Is there markup? Markup of 25%. So unrealized profit on inventory. 25 over 125 times unsold. What does it give me? 25 divided by 125 times 4,800. I'll go to the seller's account. Go to the seller. Who is the seller? Prince, subsidiary. Why do you sell and make profits? Unrealized profit on inventory. $800. What was in the retail earning of the 113? 113,000. Then consolidated inventory. Whoa. Consolidated inventory minus 800. Then I will add to cost of sales. That's aspect. Unrealized profits on inventory. That's all. That is all. 5,000 times 6 divided by 12. 12,500. Next. Visual information next. At the end, King books show an outstanding balance owed to Prince of 10 million. The Prince record show a receivable of 50 million. Okay, it's showing a receivable of 50 million. The difference arose because the King dispatched a check in transit, which is cash in transit for 5 million. Simple issue. Trade receivable, trade payable, reconciliation. It's okay. Total receivable minus 3,000 plus the cash in transit of 5,000. Then I'll go to the payable. Liability minus 10,000. We can know each other. On 1st of January, we acquired associate for 3 months. Acquired 30% interest in night for 40 million. Cost of investment has it been recorded. Now reported a profit after tax for the year ended of 27 million. Recorded. Because it is silent, it has moved on. It does not say so otherwise. I'll say the cost of investment. First thing. Minus 40,000 in associates. Then I will now go to Investment in associate at cost. 40 million. Said he made a profit after tax of 27. Share profit. (0.3 times 27,000 times the acquiring January to March 3/12. That's all. 3/12. Any issue? Maybe my people don't sleep. I want to know.
We are with you, sir.
Okay. 30%. 0.3 times 27,000.
2025.
2025. I will credit retain. As per SRP. What was the return of the parents? 155. Then share of associates profits 2025. An impairment review conducted on 31st March 2020 reviewed that the investment in Knight has suffered impairment loss of 1 million. Associates has impaired by 1 million. Of 1 million. On debit or credit investment in associates. Impairments. As of. I think as the policy, that's the end of the question. And now consolidate. But before that, I need to determine my return at the date of acquisition, which I will apply formula. It is during the year. So determination of return at the return at the date of acquisition was year ended. Year ended. Profit or loss. Equals to retain earning at SWP. Let it be profit for the year is 23,000. And 6/12 equals to what was the retaining at SWP. One. 23,000 divided by 22,000 by 6 divided by 12, 11,500. 3,000. Equals to 113,000 minus 11,500. 101. 101,500. Good. I'll go there. Return at date of acquisition. 101,500. Sum it 30,000 plus 15,000 plus 101,500 minus 20,000. 126,500. So to calculate the goodwill, 126,500. This is gain on purchase bargaining minus 108, 18,500. It is fair value. It will be shared between the parent and SCR. Purchase bargain. Is fair value. NCR will collect 0.2 minus 18,500. 37. Then purchase bargain. .8 times 18,500. 14,800. There's a problem. It must be shown separately in the POI, and I've opened it. I drop one C. Oh, I put it somewhere. Purchase bargain. That will not stop me from opening everything. $18,500. That's it. Then I can now consolidate. $113 minus 800. $113 minus 800. 112,200. Share post. $112,200. Minus 101,500. 10,700. Share profit now. Between the parent and NCR. .2 times 10,700. 2,140. Share profits. .8 times 0.7. That's the end. Ladies and gentlemen, this is where we are going to stop. Let me send the remaining solution PDF so that you can go through it in case you have any question. We're almost to level. So please. Let me look for the solution assigned to the platform.
Sir, please, can I ask a quick question?
Why not? Why not? Why?
Yes, under assets, PPE, there was this 20,000 naira that you deducted. Can you please explain how?
The question said there's a revaluation downwards. on land by 20,000.
Okay. Okay. Thank you.
Say there is a downward, which we are going to credit the PP and debit the reserve, which you have done. I've sent the solution to the platform on King and Queen. Do you see need this one? Don't think it is necessary. But if it is in it, I can send.
Sir, is it this one?
Yes?
Yes, please send it, sir.
You send, okay?
Yes, sir.
But which is my command? I'm sending now. Yeah? Done. I'm sending the second solution. Just wait. Now we can go and sleep. I've tried. So Thursday, sub. After sub act, fellow subsidiary. After fellow subsidiary, I kickstart sub and dishi. Start sub and dishi. 2 immediately. No time to waste time.
Sorry, sub and what?
Dishi. The one they've been testing for the last 3 days. I will even sub last night question. So that you can see. I've sent. See you on Thursday.
Thank you, sir. Good night.
You're welcome.
Blessings.
Thank you.